Welcome, dear traders, it's me, Kate Stichina, and you are watching a recap of the Asian session. On a Monday, stocks managed to recoup their losses and resumed an upward movement. Australian and Japanese shares climbed as well. However, stocks in New Zealand closed at the two-week lows. The country declared a state of emergency due to a natural disaster. The inflation report will hardly be so devastating for markets like Hurricane Gabrielle for the Oceania region. However, it will definitely set market trends. Inflation in January is projected to decline further. A slowdown began in July last year. The CPI has been dropping for 6 months in a row. It slid to 6.5% from a whopping 9.1%. However, analysts fear that this time things may not go according to plan. Inflation figures in January could be higher than expected. At the start of the year, suppliers often conduct price revisions, whereas sellers usually increase prices. Besides, market expectations about the Fed's rate cuts in the second half of this year have receded noticeably, so inflation figures for January could certainly trigger a surge in volatility. However, this is not the only market-moving event today. The US dollar is no longer sensitive to inflation data and the Fed's monetary policy decisions as it was before. Earlier, it went up amid hawkish comments from the Fed officials, and last week it stood still following a chorus of hawkish remarks. It appears investors did take notice of the regulator's warning. The watchdog stressed that a further slowdown in inflation would hardly lead to a policy reversal. However, the greenback is likely to become volatile for a while after the release of CPI data. A higher than expected reading may undermine the last hopes for a policy change and boost the US dollar. Alternatively, if the report is positive, the greenback may regain a downward movement. It's trading versus its main rivals in the narrow range of 103.10 and 103.30. The euro and the pound sterling are steadily rising in the Asian session, and the US dollar was hovering at 103.20, gradually declining. The yen is also gaining momentum amid the weakening US dollar. It broke out of an almost 2-year downtrend. From October to January, the yen managed to recoup half of its early losses. It looks really impressive given that the yen did not receive any support from the Bank of Japan. The regulator made several interventions in the foreign exchange market and expanded the range of government bond yields. Most of the time, the yen has been growing amid verbal interventions and rumors. For instance, the Japanese currency gained ground amid rumors about a new Bank of Japan governor and his view on monetary policy parameters. The yen also edged higher amid falling US treasuries, and the dollar-yen pair was moving in a downward range of 131.80 and 132.5 in the morning. At the start of the Asian session, it reached 131.99. However, keep in mind that the rate gap between the Fed and the Bank of Japan is widening. The Fed remains extremely hawkish. Japan's economic recovery in the fourth quarter of 2022 turned out to be smaller than expected. The country's GDP grew by only 0.2% instead of the forecast reading of 0.6%. So, the yen may lose momentum today if the US CPI climbs. However, its appeal as a safe haven asset is rather strong. The Australian dollar inched up today as well. In the Asian session, the AUD USD pair was trading in the price corridor of a 0.6949 and 0.6978. The RC managed to stabilize trading in the uptrend channel. The bulls may push the pair even higher if the US inflation data is not disappointing. If CPI drops, the pair may move above 0.6967. And in this case, the resistance levels will be seen at the breakout points and the previous peaks of a 0.6984 and 0.7011. A potential support level will be located at 0.6855. New Zealand declared a national state of emergency on Tuesday for the third time in its history. Cyclone Gabrielle reached the North Island with the floods, wind and rain, knocking out power to tens of thousands of homes. The main stock index remained at its two-week lows. The kiwi tumbled to 0.6337. Food prices in New Zealand increased by 10.3% in January, and the trajectory of the NZD USD pair will also depend on US inflation data. In the Asian session, it was moving in the bearish corridor of a 0.6330 and 0.6368. It's easy to keep abreast of crucial market events with a reliable dealer. InstaForex team strives to provide the latest news so that you will always open only profitable trades. Subscribe to our channel and stay up to date with the latest market developments. See you soon.